All right, hey, welcome everyone. Welcome to the Hurley Investments, the market view commentary for March 3rd. We just ended a horrific February. With all due respect, I'm pretty sure February was down a negative 1.89, and now we are down, I will say roughly a negative 0.50% for the year. So it's a negative year on the S&P 500 as of right now. I will get an email out for our recap. I just have had so much that I'm working on because thanks to you guys, I'm getting a lot of emails, a lot of questions, a lot of concerns, and that's what I'm here for. I hope at a moment's notice, don't worry about getting a hold of me or worrying about bothering me. K. Hurley at hurleyinvestments.com. We've got my toll-free number up there. You're welcome to give me a call on the toll-free number. Most of you that are clients obviously have my cell phone number. I'm not going to give the cell phone number out over the public because then I'll get all kinds of weird stuff coming to me. But obviously those that are members of my organization, that you let me invest your money, that you care about your hard-earned money, you're always welcome to give me a call and I'll get back to you as quickly as I can. First thing to go through tonight, and again, I've only said it about a million times, so I want to get a bunch of people answering this one. Trading/investing is, I only say it a million times, what is trading and investing? One more time, I want you guys to pay attention to this because I think it's going to be pretty darn important. Trading/investing is, what's the word that follows? Oh, perfect, Bill. A process. Thank you, Mary. Thank you, David. Perfect. It's a process. So I just want to bring a couple things out that hopefully you can understand. And if this in any way, shape, or form ruins your belief in my character, I'm going to apologize up front. But there are a couple things that this means. I can never, with any true accuracy, tell you, and I'm going to use in quotes, exactly what the market is going to do. Second, and I really wish I could take care of this. Second, stocks go down and up on their own accord. And there is nothing, I'll do the quotes again, nothing I can do to speed up the process of when they will move in the direction we want them to. I just can't do it. There is absolutely nothing in my power that can make them move the way that I want them to move. Now, the good news is if you trade in a process, right, we've got a position that makes money on the way down, a position that makes money on the way up. We have a 2 out of 3 chance of having it move a direction that we want. So when some of you are worried, hey, the market's lost like 8% in the last 2 weeks, it doesn't bother me. And you know what? I love you. All I'm going to say is I love you. Someone just typed in, now you tell me, exclamation, point, lots of laughs. You are my favorite for tonight. Thank you very much. all that we do is we look to trade in that process so that when things go down, we convert them to more shares. Sometimes things have been going down for 2 years, like Disney, like Bank of America. Sometimes it's only for a 6-month stretch, like Bank of America. I said should have been Disney and Baidu. That's what I was trying to say. Sometimes it takes 2 years for Disney and Baidu before they start to come back up again. Bank of America did it in 6 months. We looked excellent. Apple's working really well right now. Last year, to be honest with you, we were moving into new positions, NVIDIA and Micron. We gave up a lot of profits in December. NVIDIA and Micron kicked our butts in December. It's an expensive stock. It took us time to understand how to trade it and how to do it right. But the process allows you the ability to truly, the process allows you and gives you the ability that over a period of time, what that time is, we have no answer for it. But over that period of time, we have a process that changes the odds to a 66.7% of being in your favor. We have a process that adds more shares so that you have an explosive growth to the upside when it comes. And the best part about it is we're going to be the only ones that won't sell you a handful of magic beans that, hey, we've got an algorithm that predicts the future. We've got a process that predicts the future. Hey, we've got a system that predicts the future. We're not any of that smoke and mirrors. We are a person that is able to react to the market and to change those odds in your favor so you have, again, some protection on the way down. We get to dollar cost average for you without asking you to put more money into the market. We get an explosive growth when those stocks come back up. Really, if we could see that spring-loaded return in Baidu or in NVIDIA now, in Disney right now, Bank of America again, boy, we would have 100% year for this year, but we cannot, and we have no idea exactly what that market's going to do and when. So that is just something to keep in mind. Okay, here we go. We have problems with taxes and 1099 miscellaneous. It is not a problem per se, but I've snapped a picture for you. We have 53 contracts. No, we have 153 contracts that if you are in an individual account or a taxable account, your tax guy is going to have to help you out and put one order in for you. On these 153 contracts, Schwab did not carry over the cost basis of the short 300 call on Meta platforms. I found it interesting because I spent hours today trying to figure out why don't they do this? What about this? What about that? This is called an undetermined transactions for non-covered tax lots. Or another way to look at it is it's just how do I say it? It's a position that the cost basis wasn't brought over. I really chewed out, well, I guess I was trying to chew out Money Block. And thank goodness they're such a good organization. Money Block came to me right away and Money Block said, hey, we didn't require this. It's not required for us to do this, because I was trying to get mad at Schwab. I've already had the issues with them, already working on lawsuits with them. I'm already trying to figure out how I can stick it to Schwab in any way possible, right? Kevin, as brokerages, they're not required to bring it over. That's an individual's problem. I was like, really? Well, that doesn't seem fair, but that's the way the tax system works. Taxes and 1099 miscellaneous, and I'm just going to put it like this: if you have a taxable account, this section has to be line item inputted. All that means is your tax guy says, hey, can't spell, I'm seeing all these mistakes. All he's saying is, hey, it's all actually right here. There is a missed cost basis on a 300 short call. As we went and did the research on it, the average cost basis was $3,385. It's a short call. So when you put that in and you work the negative 19,409 against the 24,646, you'll find that you have a profit of roughly that 56.42. If your accountant doesn't know what he's doing, you can just tell him to assign the non-covered tax lots at 19,409.98 minus 33.85. It comes out to roughly a $16,000 loss. Is it really a $16,000 loss? No, we were doing a bull call. We spent 56.96-ish. I'll grab a calculator, do the numbers for you, and I will write them down. But we spent $56, and we're going to say 97 cents here because that's going to be the best rounding up. If I could just go ahead and type it in my calculator, okay. Minus the $33.85. What we did is we spent roughly $23.12 to make 60. The problem is Schwab did not bring over to Money Block the cost basis. The cost basis is roughly, amongst all the accounts, 153 contracts, it's roughly $33.85. So that cost basis comes over of $3,085, or if you want to, you just subtract the 19 from the 24, and there you go. I would take the credit. Being honest with your taxes is kind of important. Give that extra credit of $3,385 into it. If you do the math, basically you made $47,000, $46, $36, $679. Yep, $36.82 was your profit. Well, Kevin, that's going to be a little bit more, a little bit. Yes, we understand they're off just a little bit for most people, but this is where your accountant comes into place. If you're doing your own taxes on this particular one, this is where you have to line item the undetermined transactions, and that'll offset this big gain of $25,000 you see on your short-term capital gains. This offsets it and it makes it significantly better for you, is the long answer. Okay, what was my third? Oh yeah. I got this text from one of you today. Holy NVIDIA, well, actually, let's do it the other way around. I got the text that said, holy crap, NVIDIA, but it was the other four-letter word for crap. I understand some of you are worried about NVIDIA. Yes, again, we did a horrible job the end of last year on NVIDIA and Micron. We gave up a lot of profits through November and December because of NVIDIA and Micron. We now are better at understanding how to trade it. We've watched it for the last year. We were extremely smart on the last earnings. Yes, they knocked out of the park, and I'm going to go through some of their numbers with you. But NVIDIA has been on a tear to the downside. And some of you have been extremely worried about, oh my gosh, Kevin, what is going on here? What are we going to do? Let me explain today to you, and then I'm going to work the numbers for you. So in this particular account, today NVIDIA was down 8.69% or $10.86. If you just owned NVIDIA, you got your butts handed to you today. You lost over 10% of your total invested capital on NVIDIA. The loss was $5,430. Some people that's a big number, other people it's not such a big number. I tell you, $5,430, even when I'm rolling in millions of dollars, will always be a big number to me. Our protection. We have long puts in place out to April 4th, $127. It cost us $10.25. Today we made $3,800 on our protection. We also added the short calls to complete the collar trade at $145. We took $9 of credit in. We picked up another $1,452.50 of profit today. Yes, the stock lost $5,430. When you add our profits together, we made up $5,252.50. Not bad on a stock that lost $5,430. In fact, to be honest with you, I think that's phenomenal. I'm going to work those numbers for you just a little bit. $5,430 minus the $5,252.50. Today we lost $177.50 on 500 shares of NVIDIA. Everyone else that owned 500 shares lost $5,430. We lost $177.50. We divide that by the 5,430. Out of your 100% loss, we lost 3.25%. Our protection protected us roughly from 96.75% of the downside movement today on NVIDIA. This is what we do. This is how we protect NVIDIA at earnings. I don't know if you remember, but earnings was closer to, I thought, $26.20 some odd cents when they had their earnings. I want to work through just a little bit of the numbers with you, and I'm going to use this example. The average price for this NVIDIA was $121.15. So you buy to open NVIDIA at a nice $121.15, which is equal to your cost basis, which is equal to the risk in the trade. Yes, you can lose every freaking penny of any stock that you buy. You'd like to think you could sell out early. The way the markets are supposed to have their, I don't know if you noticed actually, but the way the market's supposed to have their circuit breakers, if it loses 5%, no circuit breaker hit today on NVIDIA at 5%. it should have hit the last half hour of the market. Unfortunately, when it does hit, it seems like it just lets the money makers and the big guys, the hedge funds, sell off. It opens up, down even farther, 10, 15%, and then you're playing catch up. But anytime you buy a stock, that's your cost basis and that's your risk. What we do, married put strategy, we also buy to open. And in this case, we did an April 4th, 2025, $127 long put. This was slightly in the money when we put it on, but this cost us $10.25. At the same time, we sold to open a 20 June 25 $145 short call, and we took a credit in of $9. Just taking a look at this right here, we are protecting NVIDIA from $127 down to zero for a whopping $1.25. That is what we're protecting NVIDIA with or on. We finally have got it right. Puts since the splits have been ridiculously expensive. It took us time to understand to protect NVIDIA, we have to sell a short call. It took us time to understand we're okay getting called away at 145. We're making some money on the puts, although we've made very little money on the puts. We're finally getting it right. It's starting to click. We're understanding more and more how to trade NVIDIA. The neat part about this particular trade, and for this particular account, I know some of you are not in here at $121, but if I was to go ahead and do our new risk in the trade, I love the way these numbers work out. You take the $121.15, you had to add to it another $10.25. So your new, I call it the new risk. That's not what, right? It's the new cost basis. The CB, right? The new cost basis in the trade. You just add these numbers together, and that comes out to be $131.40. The new risk in the trade with a protective put strategy, and I'm going to go ahead and put this in here, a protective put strategy, even though I can't spell. I am going to buy a new computer that my T button works a little bit better. You're just going to trade when you use a protective put strategy is the $131.40 minus your right to sell at $127. Your new risk in this trade is a whopping $4.40. If you take the $4.40 and you divide it by $131.40, your risk in the trade for 3.35% of your total invested capital. If you want to lower that, you sell to open that short call at 145. Your overall risk until the long put expires is equal to $4.40 minus $9. I love this because you're like, wait a second, how do you get a negative number? You have zero risk if you are this individual that got in at $121.15. The worst you can do is make a credit can do is make a credit of $4.60. Why haven't you guys done this the whole time? Well, NVIDIA has been a new stock for us. Yes, it kind of kicked our butts through November and December. We're on board. We've got it figured out. How low do we want NVIDIA to go? That's the number. How low will it go? Our hope is low. But realistically, we're probably only looking at that $100 mark. If I was to look at a chart on NVIDIA, we are most likely going to be ready to pull the trigger and take some protection off, looking at our previous low of 193. That's going to coincide somewhere close to the 110, which we think it can break. More so, it's going to coincide with the S2 9069, 2 standard deviation expectation. I like the idea that it's going to head lower for longer. Kevin, why would you say that? It had its one opportunity to a certain degree. It had its one opportunity to try to break the 200 again, and it failed miserably today. Not only that, it failed for 2 out of the last 3 days at over 400 million shares traded. NVIDIA's in trouble. Is it political? Of course it is. I'm going to go through that with you guys in a moment. It's very political because they had awesome, ridiculously good earnings. I mean, it was ridiculously good. Okay. Target is actually now on the 11th. Here we go. Big picture. Growth monster is now more menacing than inflation boogeyman. I hate the media. The media is Trump tariffs are going to cause inflation. Now Trump tariffs are going to cause lower growth. Back to the matter right now. We are worried about growth. Do I think our GDP is going to get lower than it was the last couple of years? I do not. But that thought process is based on tax cuts. You want to see business explode? You give some tax breaks. It only has to be for a year. You want to see the consumer explode? You give them some tax breaks. Again, do I know if Doge will give 20% of $400 billion tax break, which will be about $5,000 per person that pays taxes in the United States? I don't know. Would I like it? Of course I would like it. Kevin, will that increase or worry you about our deficit? Our deficit is so big right now that I think it's deficit spending that worries me. Am I willing to give up the 5,000 if it'll help lower the deficit? Sure, why not? That's looking longer term. That's looking to help our kids. But the reality is, growth concerns right now are running ahead of growth promises linked to deregulation and lower tax rates. No longer are we talking about inflation. Poof, inflation's disappeared. For the last 2 weeks, inflation has not been on the talking heads. It's gone to growth. I want you to think of this in 2 different ways. For weeks, I told you the tariffs, the first time he did it, did not create inflation. Biden kept them on. Again, it did not create inflation. We obviously had COVID and a supply and demand. That created the inflation. If you don't think that created the inflation through supply and demand, I'm not sure you understand economics. And why these talking heads on TV always have to come up with a reason like they understand and know it all. I would love to find someone somewhere that would just say, hey, right now we don't know. Right now it's people taking huge profits over the last couple of years. Right now it's good news is bad news because Nvidia had a hell of a quarter. I would love to see someone just say, it doesn't make sense. It doesn't. I giggle at these models that people come up with that are hardly ever accurate. They're hardly ever accurate because they do average returns on the stock market. Never in the life of the stock market has it given you an average return. It's a variable return. What does that mean? Would you like to pay average interest rates on your home or a variable interest rate return on your home? All of us would say average because it keeps it steady, always the same number. That's the benefit of having an average rate of return. The market never offers an average rate of return. We all want that, like our interest rate we pay on our house, but it is a variable return. Think about the stock market as if you're going to get a variable return on your interest rate on your home, because that's the reality of it. None of us would want that on our home. Yet we all of a sudden want to use it in these models and expect our models to be accurate when the whole premise of the model is wrong. That is really the reason why most people are so ticked off with well, I just read something that threw me off base a little bit, but this is why most people don't ever do a financial plan, because it doesn't work. There is something else that two people have just brought up that I'm going to go ahead and mention as well. The government printing trillions of dollars and giving money away during COVID. Yes, it started with Trump. Yes, it was exasperated by Biden. To be honest with you, I'm not sure if I would have done things much different. I'm going to go ahead, I'm going to make the comment. I don't think the money was used wisely, but I do think it helped some people get back on their feet. I don't think it should have been used to force people into a vaccine. We're pretty sure that vaccine killed my niece. So I have some personal issues with it. But to be honest with you, when it was happening, I wasn't throwing a fit about keeping businesses afloat, getting a tax break. So I don't know if I have the right to complain about all those trillions of dollars. I can't complain on how it was used, but when it was happening, I wasn't speaking my mind. So for the comment there that trillions of dollars did cause inflation, that is probably part of it. But again, I think it was the supply and demand of the world shutting down through COVID. Businesses were shutting down. Supply and demand was most likely the easiest and most explainable reason to the inflation that we've had. And we're still catching up to it. Okay, here we go. Problems. Our market's going to end lower. We're negative. We dropped through. We had one day where we're slightly above the Dow and it crashed. We are crashing through the Dow. I think our next stop is most likely going to be that 4,200 and it looks like 42,972. So I'm looking at well, we did get a bounce right there. It's probably going to be the 42,103 that coincides with the 4,100 or 41,853 Dow Jones Industrial Average number. That's where I would expect that we're probably going to be heading down to. Which is funny because 2 weeks ago, I'm pretty sure I told all you guys, hey, our markets are bullish. Look what happens in 2 weeks. We are definitely bearish on the Dow Jones Industrial Average. S&P 2 weeks ago were bullish. I'm really hoping Key went there and typed in that, hey, they're bearish again. I need to look at what he did last week. But this is awful. We basically have a triple top. 1, 2, 3 times we've hit the 50-day. Next up on the S&P is most likely going to be the 200-day down at 57.23.23. That coincides closely to our 57 there. Low 58's right here. Another low 58 right there. The 56.96. Why do I think it's going down? Why wouldn't it hold the 58? Because we've already broken today. The low was the 58.10.91. We already broke below those 5,800 numbers. We're probably heading lower. Last but not least, NASDAQ bearish. We're in big trouble on the NASDAQ. Why are we sprinkling extra puts on Google, looking to do it on Micron, fully collared on NVIDIA? We stopped just below the 200-day today. We closed at 18,350. The 200-day is 18,368. Technically speaking, we broke the 200-day today. We did not close above it. So we are in trouble. We are in trouble. In fact, someone made a comment. Let's give some kudos to Maud. Maud is the only one that said that the correction was coming in the next 30 days, and she nailed it. Maud, when you are done being a doctor, there is a position for you at Hurley Investments if you want to start managing money and managing other people's money. Maud actually hit that one on the head. Then the next 30 days, she said the correction was coming, and boy, did it. Where will we end March 2025? I could see us going to a full 10% down from our highs. Remember the highs? Going to the S&P. Come on. $61.47 is going to go down to 57. Most likely, that's close to that 10%. Well, I think it all comes in March. I do. I think it will all come in March. And let's face it, the reason why markets are down today is because we're going to put a 25% tariff on Mexico and Canada, add another 10% to China. If they in 30 days can put enough troops on the border, which is kind of ridiculous the way that it's looking, but it would not surprise me if this gets backtracked relatively quickly. And with a correction of 10%, that will spring load us to move higher. Right now I'm saying 1.5%. February was down 1.87, so I was pretty close to my 1.5% in February. And the reason why I'm saying only 1.5%, I could see us going all the way down to the 200-day, but I could also see a recovery in March when Mexico and Canada and Trump get on the same page. This week, no real earnings. This is the first week of the retail earnings with Kohler's, Dick's Sporting Goods, American Eagle Outfitters, Ultra, Dollar General, DocuSign. But this will start the first week of the retail sales, which will run for 3 weeks usually. Our retail companies are reporting en masse in the next 3 weeks. Economic reports. This week, ADP employment could be important. ISM manufacturing was somewhat important today, but we are blowing it off until the market realized that there was no going back from tariffs. Our ISM manufacturing is still above 50 at 50.3. We expected it to be at 50.7. So our manufacturing numbers are coming down. Average work week, non-farm payroll, private payrolls, really our economic reports all come on Friday when they will move the markets one way or another. Good news is we're protecting for technical crossovers, the downside and tariff risks. Just to give you guys a general understanding, and I'm just going to work through these. XYZ, we took off, pretty sure it was $88 puts. $88 puts and letting it run because way oversold. What else do we have? Verizon puts are on and the stock was up today. People found protection Verizon. NVIDIA, we are collared or in a bull put with short call protection against the long. It can make up half of it, and we're really looking to take that off for a bounce higher. The downside protection of the short call against the long is about 34% protection against that long. Micron, we have, to get it on the right level, Micron, we have 107 puts on a $90 stock. We did that one pretty good. Meta, for those that own the shares of Meta, we have $700 puts. The spreads also are protected to about 50%. So the spreads have 50% roughly short call protection. And we're not worried as of right now on the ones that expire in April or June. We're going to get our full 100% return on those, it looks like. Google. We have 180 puts and we sprinkled 170 puts. That's how we made more than the stock loss day, or we're pretty close to that. Ford. Heck, we're gonna kill off Mexico. We got $9.35 puts in place. It's a little bit awkward because of the dividend, but we're protected on Ford at $9.35. Disney, no protection. Letting it bounce off of the 50-day. Baidu, we took protection off like at 108 or 103. We took it off down around 81-ish to $2. We added protection back on it, 87. Credit to Kiev, who nailed the top, but you could see it kind of was the top of its range. Great place to add protection on Baidu. Bank of America, you really don't need protection on it, but we have $45 long puts on Bank of America. And Apple, we have a 260 short call in place. We're doing the best we can to protect as much as we can on the way down so that you're at a point where you feel comfortable where portfolios are at. I think we did an excellent job today. An excellent job today of helping you understand how worried we are that things will go through a full 10% protection. Okay, very interesting. Warren Buffett calls Trump's tariffs on goods a tax. Says the tooth fairy doesn't pay him. The short answer, and I'm nobody to talk against Warren Buffett, right? The short answer is yes, it is a tax on those goods that people buy from overseas. Canada saying how our energy is going to go up so much in the United States. I just sit there and I scratch my head because we don't have the pipeline. Obama crushed that pipeline. Biden crushed the pipeline. We're not receiving huge amounts of crude. We're not receiving crude, unrefined crude in the United States. There are not huge amounts coming in. Canada not sending us or putting a tariff on their crude coming in will have next to no effect on the gas prices at the pump for the USA. But if you are buying goods from overseas, and that's going to include my Ford trucks, if I'm buying my Ford trucks that have come from Mexico on up, we will be paying that extra tax on them. The good news is I found a really good article that says, hey, most of the time you'll see the company eat it at the start to see if they get released and then they can come back down. Very interesting video. T. Rowe Price, you have to click on the link. They are very invested in AI and think this is a huge opportunity coming forward for getting into more AI. So I just think it's a unique, well, what can I say? This is most likely a great opportunity to be able to buy back into some cheaper stocks. A comment was just made, and I'm going to agree 100%. It's BS to the northern border, no drugs, and mostly issues from U.S. coming to Canada, lots of guns and drugs. I will agree that yes, I don't think we have a huge drug problem coming from Canada. I don't see it there either, to be 100% honest with you. So with that said, I'm going to side on the person that just made that comment. Okay. NVIDIA sales growth 71% on AI demand. All the numbers for NVIDIA were amazing. The problem, and I wish some people could understand this, the problem is the revenue in the quarter rose 78% instead of 230% from last year. The full fiscal year revenue only grew 114% instead of 286%. Revenue was only 39.3 billion versus the expected 38.05. Earnings per share were 89 cents. Their next quarter, they guided to 43 billion instead of the estimated 41.78. They did everything right. Everything right. Booked billions of dollars. 73% gross margin. Huge. But they didn't do enough. They had $11 billion in Blackwell revenue for a chip that's not even on the market yet. Pre-orders, not pre-orders of 11 million, not pre-orders of 111 million, pre-orders of $11 billion. And for whatever reason, NVIDIA is going down. This is a great example of where a company has lost favor in the market. They lost favor in the market. For all intents and purposes, it's not a big deal. It's a buying opportunity. It should be. Again, when will it come back? I don't know. I don't have that answer for you, but it is a buying opportunity. Jackie, I got your text there. Piece of cake. We'll take care of that. Huge amounts of SP 500 stocks that are oversold. This one came up for me. Not that we trade all of these. I did find Tesla and PayPal interesting. The reason why this popped up though was the AT&T that I'm watching for NVIDIA, the AT&T that I'm watching for Verizon that also was on this list. There are a lot of stocks that are going to be opportunities in the near future. Jamie Dimon calls U.S. government inefficient and says that efforts need to be done by Elon Musk. I find this one very interesting. It's kind of interesting to see billionaires argue back and forth, right? But I would put Jamie Dimon in that same boat as I would put Warren Buffett. He's made most, if not all, of his calls right. I like to see some backing by one of the more influential people that I think is out there in our stock market, by Jamie Dimon. I loved NVIDIA CEO Hang saying that AI has to do 100 times more computations now than when ChatGPT was released. He's pushing the understanding of what's going to need to be done by AI. And then, of course, I love the fact that Apple all of a sudden is going to put a $500 billion US investment to make a factory here at home in the Houston area. Obviously, it got beat up by having all of its, I shouldn't say all of it, by having China make some of its parts. Will this make the iPhone a little more expensive? It will. It's foolish to think that what we can pay people in China to put everything together for dirt cheap, that they can't do it here. But I love the investment. I love that the tariff threat has moved Apple to invest here locally. And I just found an interesting article on how to produce income from video while it's waiting for a rebound. All they're saying is a bear put spread. I do think it's interesting that, for $3 you can try to make $8. I think we did much better on NVIDIA today using the collar strategy. But I do like that I'm seeing more and more people talk about using these options in regards to helping their portfolio. Okay, with that said, what questions do you have? I think I've got a couple already here. Someone made a comment about the profit. A profit is still a profit, hard to understand, only for some investors and talking heads. So yes, again, I'll just put it in here. NVIDIA, unfairly punished, but it is your buying opportunity. Geez, buying, I can't type. And maybe we can add more shares. The good news is, for those that are in NVIDIA, we've done a good job of protecting so we can add to some more shares. So, Jackie, I got yours. So a comment was made a bit more expensive. How about a ton more expensive? So I would ask, first of all, where are you getting that from? When you're looking at the oil and how little oil comes in from Canada, gas prices are expected to move higher by 4.3 cents from the Canadian tariff rate on gas. I don't think 4.3 cents is higher. For trucks coming from Mexico. And understand the Ford trucks right now are somewhere between the $83,000 mark to 100K. If you want to go fully loaded, you're looking at 122 to 135K. So those are the ranges for their trucks. This is from Ford's website. And this is because I'm assuming Ford will probably eat the price savings coming over, because it's still cheaper to have the parts put together overseas versus here. Obviously, they have their trucks here. The cars that are being made in Mexico, they're probably going to push out internationally. But Ford trucks, 2025, are looking at, I run the calculation here. From Ford's website and their trucks, for US based sales, $117.90. I have no idea how they came up with that one. Overseas, which is going to be the Mexico ones, if they are going to be shipped to the United States instead of going overseas, that price is significantly more expensive. It looks like it's going to be about $970 if they ship it in from Mexico. And again, this comes off of Ford's website. Ford is very vocal against tariffs. Of course he's vocal against the tariffs. He has, for dirt cheap, let's call it slave labor. He has slave labor that's putting the cars together in Mexico. I might make this comment, and it's probably not fair to say, but the majority of recalls on Ford trucks have been from the Mexican factory. And actually, that is not fair to say, because some of the parts were the airbags. So that actually is not fair to say. Yep, I actually, that's not correct. I could say the majority of the functional, like the driving, what was the driving one they had? The steering column didn't have the connection for the emergency brake and the braking. So yeah, you know what? I'm gonna walk that one back. That's not fair, and that's not correct to say, because a lot of the recalls were on their airbags. But there were significant amount of recalls that came from not properly assembling the driving column to the emergency braking. And that was about 1.5 million trucks that were done wrong in Mexico. But that, again, not fair to say majority. So yes, I'm walking that back. Don't hold that against me. Hopefully you can see that I do look at both sides and I'm not judgmental to one or the other. All right, any other questions coming in? Any other questions? I'm trying to stall to see if someone else wants to throw something in there. If you just want to chew me out for that comment, I did walk it back. My bad. That was not an accurate statement. And I hope you understand that. Actually, I hope on your side, I do get passionate about things, but if I see that I have made an incorrect calculation or if I have misstated something, I will definitely walk it back. I will own the mistake. I will walk it back and admit when I am wrong. And hopefully for some of you that obviously showed that to say the majority would be very incorrect. That is not true on where I was going with that. And so I apologize if that offended or frustrated someone or anyone for that matter. Okay, I don't see anything else coming through. Hey guys, I appreciate you being here. We're protected. This is the process where you start to cheer to see things head to the downside. This is where you're excited to see an opportunity to pick up some things cheaper. This is where on our stock replacement strategies, if on the one side we can make a profit, we now have the opportunity for the upside to head higher and we'll be in really, really good shape. All right, I've stalled enough. Hey, appreciate you guys being with me tonight. Thank you very much. Look forward to seeing you guys next week. If you do have any questions or something you want to comment to me personally, don't hesitate to send that email to khurley@hurleyinvestments.com. You can always give me a quick buzz on the cell phone. I'm looking to get this uploaded pretty quickly here, guys. Look forward to seeing you next Monday. Have a good evening, and know we're always watching so you don't have to. Have a good evening. Bye-bye.